These are the slides for Module G, and we'll be talking about financial statement analysis and ratio analysis. In order to do some sort of financial statement analysis, we need to understand the financial statements better. We'll be talking about the balance sheet, the income statement, and the statement of cash flows in this module. But the fourth financial statement that you need to understand is also the statement of shareholders' equity. Now, the statement of shareholders' equity is honestly given kind of short shrift in this text. It's a series of computations that I would really kind of do out of reflex just to make sure my numbers are right. If you look on a real set of financial statements, you'll find that the statement of shareholders' equity is a much larger table of information. And the best way to understand it is to replicate it in Excel, build it in a spreadsheet with formulas that will figure out what the numbers are. And by the time you're done with that, you'll understand the statement of shareholders' equity well enough to be able to analyze it properly. The balance sheet, the income statement, and the statement of cash flows, however, are going to be particularly relevant when we're dealing with discounted cash flow analysis and project valuation. So we want to make sure that we know our way around those statements pretty well. The statements we're going to be using are going to be coming from Chapter 3 of the book. In this case, it's dealing with the imaginary Bartlett Company. And the income statement is pretty standard. It starts with sales revenue at the top and works its way down to net income, which the author calls net profit after taxes, and then has a few lines that come after that. So preferred stock dividends and earnings available for common shareholders. These are things that the author has put in for illustrative purposes, and I'm concerned that students are going to be confused when it comes to what profit line do we use for computations. When I'm talking about profit, I'm going to use the accounting term net income, and what I'm talking about is net profit after taxes. So in 2012, the Bartlett Company had a net income of $231. The net profit after taxes is going to be the line I'll use for net profit. The income statement is fairly standard. Assets, liabilities, and shareholders' equity broken out appropriately, and the numbers balance. Total assets is equal to the total of liabilities plus shareholders' equity. And the statement of cash flows is shown in the indirect form. The net profit after taxes, or net income, is the top line of the operating section. We add back depreciation, and then we make adjustments for our accounts receivable, accounts payable, inventories, and accruals, and come up with our cash provided by operating activities. A section for investing activities and financing activities exists, and then it gives the cash provided by each of those activities, which we can reconcile to the change in cash shown on the balance sheet.